For more on what the results mean for Activision, let's get our game on with Michael Sepso. Oh, listen to that. He's a former SVP at Activision and the co-founder of one of North America's first eSports organizations, also an investor in Activision. What was the most important thing in this earnings report?
I think what people are missing is the digital transition that the entire sector is doing. We're still
away from buying discs in a store.
We're still thinking about unit sales. That doesn't really matter anymore. If you listen to what the management said, it was all about reach, engagement, and player investment, meaning how many people are they getting, how long are they staying in the games, and how are they spending in the game. It's not about what's being sold at a GameStop or Best Buy. It's about how long are the players playing, and are they continuing to buy in the game. The other important thing that I took from the earnings call was, I think everybody missed this, they're projecting over $4 billion in revenue this year from in-game purchases. That's more than half of the total revenue mix. I think that's the first time that's ever happened. So that's a huge deal.
This is what happens when my son comes to me and says, Dad, Dad, can I buy this? And I said, well, you already bought it. And I have no concept that what he's really buying is some sticker or slick or some additional powers, right? Yeah, and that's where the revenue growth is.
That's where the revenue growth is. That's where the industry is moving. And obviously the margins are a lot better if you're not going through a physical brick and mortar store. You're just going direct to consumer. They have all the data at that point, and they're closer to the consumer. I think the other important thing, if your son's playing Fortnite, and I know we're going to talk about the battle royale games, the people that are at home playing Blackout right now paid $60 for it initially, and then they're going to buy stuff in the game. The people playing Fortnite didn't buy anything when they got to the game. It's a free download game. I think this is a massive difference in the model. Activision's doing a great job of making that digital
transition. If the revenue numbers are as strong, Mr. Kotick said, talked all about that, and you just cited it. Why did the stocks, in a word my son would use, suck?
Oh! T-Mac bringing it hard.
I'm quoting him. I would never use such words.
I got to be honest with you, I'm perplexed. I really don't know. I'm looking at the whole sector now and thinking, I can't believe why this isn't a huge buy opportunity. Take-Two did earnings yesterday. Their digital sales were up significantly. Their new Red Dead Redemption is a great game. It's performing incredibly well. They've got a little bit of a eSports exposure with their NBA 2K game. I think eSports, your last guest I saw said eSports is going to be the future. Obviously, I believe that. I've been in the industry for 16 years. Activision's invested more than anybody of all the public companies in the sector in esports, and they have kind of the greatest product out there, I think. Right now.
The floor is open.
May I ask? Oh,
yes,
I'm sorry,
the floor is open.
Go ahead, fella.
The floor is open.
Dan danced around this earlier with Tom Rogers, who, by the way, Tom Rogers stud. Are we allowed to say that?
Yes.
And I just said
I can say the other.
Put a feather in his cap.
You look, and Dan sort of talked about this. These stocks are now getting sort of cheap, even on a valuation basis. Is it Disney, or is there somebody out there looking at these? As my question is, Electronic Arts, precipitous drop. Activision, precipitous drop. To a certain extent, Take-Two as well. Are they for sale, do you think? Would a company come in and gobble these companies up?
I don't know. I mean, I guess Disney could at the right size. But I think, when you look at, so there's a difference between the stocks, right? Take-Two's got a couple of huge titles, huge franchises that are original IP that they own 100% of. Activision Blizzard, all original IP, basically. Incredible franchises. They just said, Call of Duty historically has done double the revenue of Star Wars box office historically. That's a huge franchise to own. That's amazing. EA is a little different. It's mostly licensed content. So I don't know if they're as big of a buy opportunity, or maybe because of the kind of content they're licensing, especially Star Wars, that it does become more of a buy opportunity for Disney. I think Activision's ambition is to be the next Disney, not to be acquired by it. So, I'm looking at you guys as like, why is this sector down so much? What's the trade?
I'll hit you right here. I mean, we saw this in social media names that were valued over monthly active users and engagement. And when you saw that turn down a few years ago in Twitter, the stock got cut in half. I mean, so it depends how these stocks are being viewed by investors as milestones. And so if they're trying to get away from the units, and we just saw this with Apple is trying to do this too, there's going to be a bit of a period where people are starting to digest what that new business model is.
All right, Mike, thank you very much. Let's trade the sector, guys. What do you like, BK?
Well, I'm still with Mike on this. I actually think it's buying opportunity at this point, and particularly if you're talking about a longer-term play. I mean, we're talking about ESPN is now covering e-gaming. Bobby Kotick talked about the audience out there. People aren't just playing these games, they're watching it. So it's a massive market here. I think on any weakness you buy them.
All right, thanks a lot, guys. Thank you, Mike. Appreciate your being here.